All right, well, welcome aboard traders to our Trading Week Ahead broadcast. I'm Ken Calhoun from Day Trading University and Trade Mastery coming at you live on Saturday, February 6, 2021. As always, all information is for educational use only, not making advice about what to buy, sell, or hold, etc. You may have seen me as a speaker at Money Show and many other places. So let's go ahead and get underway with our market profile. First thing we want to look at is directional strength of the market. And it's been on a relatively strong recovery this past week after the week before's big sell-off. So we've got a V-shaped recovery in the market. We're at all-time new highs, and that's great, but what's next? One thing you always want to be keen on following is where's the relative strength within sectors, within industry groups. For example, if you look at the semiconductor sector, it's kind of broken after a move up. It ran up and then it dropped and it's kind of chopping around. If you compare that with the biotechs, though, it's a much better recovery pattern. And if you compare that with things like our cannabis sector with canopy growth leading the way, that's got even better relative strength. So what you want to do to drill down is, first of all, look at the market and what's it doing, okay? Is it going up, down, or sideways? Then drill down within that into industry groups in terms of which ones are taking out new highs faster and basically beating the market. And by beating the market, I mean a sharper slope of a breakout, more consistent breakout, and a history with high volume that's likely to produce new breakouts to the upside. So we're going to be taking a look at our top stocks in just a minute. But the first thing I wanted to cover today of special note is the VIX. The CBOE, the CBOE VIX is extremely important to follow. As you've been trading any length of time, you know how vitally important the VIX is. After the really big spike, the VIX always goes up and then it spikes right back down again. But the depth of both the run up earlier last week before last and the strength of the sell-off, or I should say the drop in the volatility index last week, tells me that it may well be due for a pivot back to the upside next week. So do keep an eye on the VIX, especially. Now, if the VIX stays down here under the specific measurable tip is if we stay under the 50 SMA, roughly under 23, 24 in the VIX, then we're likely to see continued upside strength and breakouts in the stock market. So as long as the VIX stays, this is the first tip, the rider downer. Write that down. You've got a Mont Blanc pen. That's a rider downer. If the VIX stays under 23, 24, then we're likely to see continued move to the upside of the market. But the red flag is what I want you to do, and next week, tell me how well this worked out. You'll see exactly what I'm talking about. This is the advanced kind of things that my traders learned from me in the live room at my Trading the Open chat room. But the point is, trade markets and trade volatility first, or know how to respond based on price action and trigger points, and then drill down into what you're trading. Because your odds of successful trading are greatly enhanced when you know how to combine what the market's telling you with what the individual stock chart's telling you. Trading individual stock charts in isolation is fine as long as they keep going up, but you're identifying when to trail a stop tighter, when to scale in to trade more shares, how to manage risk, and all the rest of it is always a function of market volatility. So become an expert in the VIX. I am, and it's really important. So the tip is, the strategy is, if the VIX gets back over 24 next week, then tighten up trailing stops. That's how I trade. It's worked out very well for me too. When I'll tell you about my GameStop winning trade yesterday in just a minute, but if the VIX gets back over 24, that means selling may come back into the market, and therefore you want to tighten up trailing stops on existing swing trading positions and be more conservative about initiating new trades if the VIX recovers 24. Now, obviously, if it gets over the 27, that's our 200 major signal SMA, and you would not want to go long the market on any day where the VIX is back up over 27. It should be obvious because if it is, at that time the market will be crashing and burning. But make sure that you tie together a reading of the VIX with your personal trading strategy. That's a very important tip. Okay, now let's take a look at some hot stocks. What's going on here? We'll start off with swing trading charts and then move into intraday charts. How many of you are trading cannabis stocks like I told you? So this last month, or actually since November, I have been telling you guys long cannabis stocks, right? And if you'd bought Canopy Growth where I said it'd be a great play over 26. Right now it's up at 43. How many of you are trading cannabis stocks? I'm curious. Hey, Peter, Chris, Tomas, Nick, Adeline. All right, great, thanks. Right, Chris, yeah, Aurora Cannabis is great too. I'm in that one. I'm in MJ. Yes, +1. Hey, Steve. Hey, Damon. Good, great call. Yeah, because under the Biden administration, they'll likely legalize it. And look at the 2 or 3 year charts of any of your favorite pot stocks and see where they came from, like Tilray, and see where they could go. So from a relative strength standpoint, you know, the Biden-friendly sectors are things like, you know, electric vehicles, the fuel cells, energy, what else? Cannabis. Now, the EVs have already had their run, like Tesla. They've already done quite a run. Now, Ford Motor Company is one of our featured charts, and Ford's looking good. And you've got Apple is likely to do great with their upcoming JV with Hyundai, but Hyundai Kia for EVs. But for the short term, what's likeliest to run over the next week or 2 or 3, cannabis still looks great. So if you take a look at CGC, one that shout out to Jim Cramer for mentioning this one. I had never heard of growth generation, but that's the basically, like he said, the lows of cannabis industry. They sell hydroponics and equipment and all that kind of stuff. So they're one of the suppliers to the entire ecosystem. And so for that reason, growth generation has gone from 22 to 58 and over double. So that's one to not ignore. I'm in this one too. I like GRWG. One of my favorites came from one of my Canadian traders, Barry, who mentioned it to me years ago at Tilray. And Tilray has done a really spectacular run. Now they're doing M&A work. They're combining forces with APHA, Afaria, I think the name is. So APHA and Tilray are going to become one company, I believe. And so their charts are going to be identical. So if you take a look at the Tilray chart, you take a look at the APHA chart, they look pretty much identical. What I like about APHA over Tilray is that it's cheaper and you get the same volatility. So you get better leverage trading APHA over Tilray. That's word to the wise, right? If you have 2 companies that are closely related or going to merge or something and you get better leverage on one, trade that one dominantly compared to the other one. I'm in both, but I trade more APHA on the breakout. So now notice, please, one of my favorite chart patterns for an emerging breakout. How do you know something's going to go up after you buy it? And remember, I've taught you guys this pattern for many years. That's where you have a small whole real body candle followed by a large candle. I mentioned this last week. I'll mention it every week with examples to illustrate the validity, the proof of concept, right? Again, for other patterns that I don't have time to cover today, be sure to join my live, a quick commercial message, join my live Trading the Open room. And you can go to tradingtheopen.com and that'll forward you over here. Or just remember trademastery.com/live. And it'd be great to have, we have so many new members that joined the last couple of weeks, especially. The numbers have gone up significantly recently. So great to see new members. Do be sure to join my live room. We go over these kind of patterns in our markets every single week. Anyway, back to our regular program. Our regular programming, small followed by a large whole real body candle, especially on increasing volume like you can see there. So the volume spiked up to 45 million shares on that one single day. Somebody was buying a lot of APHA, right? APHA. MJ is also one that I'm in. That's an ETF. For those of you who want to trade a basket. Now, of course, I like to cherry pick stocks that have even better strength than the underlying ETFs, of which many of these are members. But MJ is one way to balance your risk by trading a basket of cannabis stocks with the MJ for obvious for marijuana MJ ETF. And you can see it's gone from 15 to 23, so another big run. And I called this one for you guys back in January. So if you listened, hopefully you did well. Here's that pattern again. Small followed by large whole body, increasing volume candle. Here's something I want you to do. Go back over your biggest winning trades over the last week or two and compare that with your stop losses and see if your big winners don't have this in common for swing trades, where you have a small, or day trades too, if you're using 1 or 5 minute candles. Look for that progression with the small followed by large. It's kind of like a momentum breakout pairing of candle patterns. And so looking for small followed by large is important, small followed by large. As my #1 favorite breakout candlestick pattern that I developed years ago, and it's one that works really well. And again, for more on candlesticks, be sure to learn from my colleague Steve Nissen at candlecharts.com. But anyway, the small followed by large whole body candle, that's mine, and that one works really good. Let's see some of these others. So what you want to do here, for example, here's a list of the cannabis stocks that I trade. The two things you want to look for is the strength of the trend. How consistent is it? The best trends look like a piece of string tied tight, right? A nice 45-degree angle breakout that runs up without major pullbacks. So the strength of the underlying trend, but even more important is what? The range, the number on the right side. Range is range as a measure of volatility is more important than the chart pattern on the left. The more important thing to follow, ask any professional trader, floor trader, they'll tell you, oh, chart pattern, that's history. I mean, it's interesting, but what counts is volatility. So when you're evaluating which charts are best to trade, give preference to those that have both a strong trend and, more importantly, a wide trading range. So when I'm figuring out how many shares I'm going to trade of each of these guys, I will trade more with one with the bigger profit potential, the bigger trading range. So this guy ran 340 to 8, so it over doubled. That's good. How does that compare with Kronos Group? 7 to 12. So that's not as good. See, notice please the difference. CRON, the low is 7, the high is 12. That's not a double. Hexo, the low is 3, the high is 8. That's over double. So that's a better volatility instrument. That's extremely valuable intel. That will serve you well for the rest of your life as a trader. I promise you. Look at the right side of the charts, more important than any of the stuff on the left side. That's the more important value is the volatility. Any market maker or specialist will confirm that. If you know any, ask them. Now, what's the problem with Aurora Cannabis? It doesn't have a strong trend. It's got a weak uptrend, but plagued by major pullbacks. So I don't trade as much of this. The volatility is fine. It's got a doubler. It went from around 6, 6.5 up to 14. So the range is fine, but the trend is not good. If you look at Tilray, however, both the range and the trend are spectacular. This guy skyrocketed from 8 to 28. So it over tripled as compared to the others that doubled, and the trend strength is relatively strong. You can see that pattern right here where my epic, cool looking cursor is pointed, a small followed by a large whole body candle. So does everybody understand those patterns? Yeah, I just gave you some very valuable intel, good useful information. Looking at the relative strength of the trend is important. The range is more important, and put it all together in a kind of a step-by-step sequence of how to trade. Now I explain how to do that in the live room. So you have to join for that, but this hopefully will whet your appetite and show you some charts that are worth trading and also the reasons behind them. One that's okay is DraftKings. DraftKings and Penn are two outstanding sports gaming stocks, and that trend will likely continue to explode upwards. It wouldn't surprise me to see this guy up at 100 by mid-year or year's end, so DraftKings is good. But what's the problem with this compared to the cannabis stocks? The range, it doesn't double. Look at the low. The low is 40, the high is 60, so it's got about a 50% stack on range. So this might be good for say a position trade or an investing trade. I would absolutely think this would be good. Again, I can't make trade recommendations, but personally, I like this one and Apple and other stalwarts like Johnson & Johnson and Walmart and Costco and Amazon and Microsoft and other staples that you would expect to be in the portfolio of any good investment manager. But from a short-term active trader standpoint, the leverage isn't as good on this one. So the trend is fine. The underlying fundamentals are fine, and it's a great stock and a great growth industry. So investors, this would be fine. But for short-term swing trading, there are better places to put your money. Another one that, again, is probably good for a longer term time horizon, what we call active investing, might be 3 to 6 months, would be Ford Motor Company. It's broken above 10 for the first time in a very long time, just a few weeks back, and you can see it's trying to test new highs here just over 12. Again, always visually look at the 3-month chart. The rider downer is the thing to write down is we've got a good strong directional uptrend in Ford. But the other note though is that it's not as good for a short-term swing because the range is not that good. The range is only about 8.5 up to 12. So again, it's got a 50% range. Now these slow, steady grinding up charts are perfect for investing. But if you're a swing trader like me, if you're looking for a trade, I put on the trade Monday or Tuesday and I close it out by Friday, or maybe the next Friday at the latest, these kind of charts with less than twice the range, they should at least have doubled over a 90-day time frame to be valid for consideration for a swing trade. Because there's no reason to put your money out at lower odds work for charts that aren't that good. For one that is good for a swing, for example, 3D. This is one that we had mentioned in our live room, and thanks very much to my trader Wendy for bringing this one to our attention. She's brilliant. She always comes up with some really great charts. This is no exception. We both kind of joke because we missed out on some of the big runs, but at least we knew there was going to be a big breakout. And this guy ran from 10 or 12 up to 48. Now, normally this kind of volatility in this kind of range would be considered relatively risky or dangerous. But what's good about 3D is the trend strength is there. It's a consistent uptrender with really good directional volatility. The other thing to look at when you're considering a chart for a swing trade is it traveling in a relatively tight channel? That's always better than big loopy charts. You want charts that are close and focused like this, what I call clean charts. I like getting a Sharpie marker that's something that just keeps going straight up and up and up and up and away, right? This guy ran all the way from 12 to 48. Now, quiz question. If we were to buy this over, so we never buy 9 and it closed what, at just around 48. So I would not buy it right here because we're right under 50, and 50 is a good kind of psychological resistance area. So you never buy 9s. You may have seen my technical analysis of Stocks and Commodities magazine article on the topic. It was very popular too. Never buy 9s, right? Because that's a exit target for most of us who've been trading for any length of time. So if I was in from 36, I'll happily sell at 49 on any pullback. But we would go in over 50. So let me ask you a question. And there's no right or wrong answers, but let's say you buy 3D, let's say 50.5, and you're looking for a swing trade. This has relatively wide trading range, but where would you trail a stop if you were swing trading this? If you're looking for maybe up to 2 or 3 week at the most swing trade in 3D, where would you start to scale out if you buy 50.5 and then it goes back down under 50? How many of you have ever done that? You buy what looks to be a great breakout, it goes down against you, you panic out of it, and then it keeps skyrocketing up without you. It's very frustrating as a trader, right? So what you want to do is develop a game plan that makes sense to keep you in the trade as long as it proves you right from a price action standpoint, but only slowly start to scale out when it goes against you. 43, 44.5, 46, 47, 47.5, 46. Thanks, folks. Put a stop at 42.93. Okay, Fernando. You cup with handle, right, Chris? Hey, PWI, I'll answer that. Let's see. A good question from Dave. Is there a way to do a scan alert for the small followed by large candle pattern? Now I just do it visually for my traders in the live room. So that would be something that I would program if I had a software program, but my software is up here. So the live room's a place to be, and we identify these kind of patterns together as a team. So I do that for you. It's kind of like done for you, right? Kind of on a silver platter. I give you these patterns as they're emerging in the live room, my Trading Open live room site. So yeah, so anywhere, the place to not hold it would be anywhere under, say, 44, 46. I would use personally, if I, on this kind of volatility chart, you can't like use a 1-point stop at 49 because you get shaken out. Look at the ATR, the average true range on this instrument looks to be roughly around 4 to 5 points. So if I buy right over 50, that's another quick tip. What's the ATR, the average true range, the average daily trading range of the instrument? Slightly above, slightly larger than that should be your stop value. So if you trade an instrument that has a 2-point range, you might use a 2.5-point stop. If you trade an instrument like this with a 4-point daily range, you might want to use a 5-point stop. So for that reason, if I bought right over 50, I'd use no more than, say, 44, 45. I'd use 44 to 46 region as the maximum stop. I would use no more down than 44 if I were to buy 50.5. You don't give away down here or down there. You don't play it too tight. It's kind of a, how to say, when you're looking for breakouts that make sense, you want to play it tight. Let's look at a chart with a tighter range. Next example. This is what my current favorite pot stocks is AFA. If I buy it over 18, let's say I buy 18.20, where would you trail a stop? Based on looking at, say, the recent trading ranges, and what makes sense? You know, let's say we buy AFA over 18. Where would you, for a swing trade, where, and I'm going to cover day trades in just a second here. We're almost out of time. I've only got 5 minutes left, but so for that reason, I'll make this quick. If we buy over 18 or so, I would use 17 as the maximum stop loss. That's the price that proves that thesis wrong. In Wall Street talk, we call it thesis, kind of like a master's thesis, which I got mine way back in 1991. But anyway, I digress. What's your thesis in terms of the breakout? My thesis, my bright, shiny idea is if I buy over 18, it'll keep going up to 20 and up and further on up in my favor, like it has so far, right? I've done extremely well trading the pot stocks these past few months. And the reason is I know these kind of rules, these trading patterns that you look for. So if I buy over 18, the price that proves that trade wrong would be a loss of 17. So I prefer that over that previous chart because the price of being wrong is much smaller, and the confirmation that I'm right comes sooner. And that the confirmation I'm right would be if it gets back over, say, it gets up over 20. So if I buy, say, 18.3, not a trade recommendation, but that's where I'm going to hit it. If I buy 18.30, I'll use 17 as a hard stop. I'll scale in over 20. I don't scale in too soon, like 19 or something. It may shake around there, but if it gets over the 20, I'll build the trade by scaling in. Anyway, so that's some random thoughts on swing trades and the kind of charts that I want you to focus on. For day trades, the one that my traders really liked yesterday was GameStop. And one of the things that you'll get when you join my live room is what I call a daily answer key. And it looks like this. Well, what we do is we cover for example, I called it long back before it got to 64, even pre-market, right before the bell. I post a watch list of the top gap and breakout and high volatility charts like GameStop, and I give specific price triggers to learn from, above which one would look for a long trigger. And so I called the long correctly to go long over 64, and I called the live exit near 67, then we got back in and I did multiple entries and exits. But in the live room, we have what's called the answer key. And unlike any other room out there, I like to give specific entry trigger points and live exit calls too, like, you know, trail a stop here or re-enter if it gets over there. So I give very step-by-step directions. Anyway, I don't know how many of you are trading GameStop. Let me ask, I'm not going to read off all the answers. I only got 5 minutes left, but I only have 5 minutes remaining. But how many of you have been trading GameStop? I traded successfully yesterday. I bought some into the close on Thursday around 56, I believe it was. I bought some at 56 because I thought that was overdone from 90. So I bought there and I sold at 71. When it ran up here, when it ran to 73, I manually put in a trailing stop at 71. It got halted, right? And then when it unhalted, it took me out because it was right under the 71 or right at 71. So anyway, but that's good. I'll buy 56 and sell 71 all day long. I got shaken out of a trade though here. I did try and buy the bounce and I got stopped out. Small stop. So I had a nice healthy win and a small stop. And then my third set of trades was I started buying into the close last night, well, right before the close, starting right over 61. So I bought some shares on that last end of day squeeze. Now this one didn't squeeze up as far as I thought it would, but oftentimes you get what's called an end of day squeeze play. And that's where during the last 20 to 30 minutes of the market, if something has been selling off, the shorts have to cover, right? That's what caused the initial GameStop squeeze. So it happens in a lot of instruments. If you're looking for something that's selling off, you often you'll get a pivot to the upside in the end. One that didn't work for me though, I bought right here at 570 and I got stopped out at 530. So that's one that did have a big epic run up pre-market all the way from, this is I think Japan Gold, right? From $6 a share, it doubled up to over $12 a share. Then it came back down to $6 a share. Took down support, which I looked at as being a shakeout. You know, market makers, I'm gonna say they take out support to shake out the weak hands down there. I bought right here on the breakout recovery at 577 was my long trigger, but I got stopped out at 530. But that I still stand behind that trade. I think that was a smart setup. Just didn't happen to work out. But anyway, the point is after big drops like this, when you see a volume recovery, often that will do a mean reversion up there. That was the anticipated, but didn't occur play. But still, it'll be on the radar for next week. And these are the kind of charts we like to follow, things with really good ranges. Here's another example of a day trading chart, BSQR. We got just a couple minutes left here. We do cover the small caps in the live room now. I used to never cover stocks under $10. Now I do because there's so many good opportunities out there, but only ones with lots of volume. I don't want to trade things that are thinly traded. I always like high volume and high volatility instruments. Look at this guy, Alpha Alpha, Mike Echo, AAME. It ran from 5 to 13. Did what's called a mean reversion pullback. That's where something runs up, it pulls back down to the mean or 50% region, which just did down to around 8. And then it usually spikes back up again, which this one did, and then back down. So the trick is understanding where the breakouts are before they occur. And one of the favorite patterns I teach in the live room is simple cut pattern breakouts above whole numbers. The trick is getting your trailing stop set so that once it runs up, you know when to sell. And one thing that I coach my traders, my live room members in always is to look for whole number exits. So if you buy, say, if you buy right over $6 a share, like you buy it at $6.10, it's always a good idea to tighten up a trailing stop if it runs up to like 680 or 690. So often it'll stall right under the whole number, in this case 7, and then drop back down again. So teaching traders how to day trade those kind of charts makes sense, as well as swing trading like some of the pot stocks. So anyway, we are about out of time. We've got just a couple of minutes. I wanted to thank all of you for being here. Appreciate it. Hey, Fernando, if we join Ken, what do we need to do first? Is there a guide we need to follow or lesson to go through? Yeah, well, I give you step-by-step directions in the room each day. I do have plenty of videos on YouTube that go over some of my basic strategies, but in the live room, yeah, I give step-by-step directions for what to look for, and I give you the answer key each morning that says which 5, 6, 7 stocks are the best gap and breakout candidates for that current trading session, and specific trigger points above which we'd look to go long. And again, all alerts are for paper trading or educational use only to teach chart patterns, but it's a really good way to learn. Just look over my shoulder, feel free to ask me questions. Traders always do. I have a big room now. A lot of people have joined lately. And so a good opportunity to pick up new strategies. So, it's only $29 with a money back guarantee. So no risk at all. You can use PayPal, or if you don't want to use PayPal, I've got a link to Visa and MasterCard at the bottom of the page for joining. But it's a really good way to pick up new strategies for day and swing trading. We've expanded coverage of the room to include swing trading now and small caps, as well as classic day trading. So I certainly encourage you to join. And by the way, normally like I said, I've kind of restrict the trials to 1 per person so that people don't just keep retrialing the room. But because we've changed the room and expanded the focus so much, you're welcome to retrial the room, even if you've already trialed it before. If you get that in at least by this weekend, by Monday. So if you've not yet trialed the room, you're welcome to try it. And if you've already trialed it, you can retrial it. And it's only 29 bucks. And yeah, I've got you covered. Even if for any reason you want your money back, I'd be happy to do that too. So I like to give you very specific strategies and tips, and hopefully keep you on the right side of the trades, because we've got so many great stocks out there. We cover the cannabis stocks, we cover GameStop or whatever is running on the day, and more importantly, the patterns to look for so that you visually memorize. What I really want you to get out of the room is not just, give you the fish, but I teach you how to fish. I want to give you the very specific patterns to use, the entries to use, and most importantly, risk management. For things go against you, where would you trail or set a hard stop? And the exits, which is the most important part of it. If you're in the money and it's gone up, 1.5, at what point do you consider selling that to lock in a profit? And that's another thing I spend a lot of time covering. Very easy to follow and very friendly. It's a user-friendly room. All questions are welcome, and traders of all experience levels are welcome. We've got a lot of people for whom day trading is new. And rather than have you trade thousands of shares of $2 stocks, which is incredibly risky and dangerous, I think it's much smarter to paper trade or trade very small and learn the pattern step by step with me at Trading the Open. So anyway, thanks for being here. Appreciate it. Hey, Fernando, good to hear it. Hey, Steve. Okay, time to join you now. Okay, thanks, trader. Appreciate it. Does the decrease in volume worry me on 3D? Yeah, usually that's a good point. If something starts to decrease in volume, the main thing we look at is price, but you want to combine price and volume. Price is the ace of the deck. If I had a deck of cards, I'd show an ace. Price is the ace of the deck, and volume is the king. And you really have to learn how to use them together, right? You have to use price and volume in tandem with the VIX, with volatility. So price, volume, and volatility and trading range, those volatility is the range, but price, volume, and trading range is what's most important. And I teach you how to do that in the room. So anyway, see you guys there. Do join up. The only thing I just request is, or just a reminder, do give me at least a few hours to get your login and get your GoToWebinar set up for you. So don't wait until the last minute right before the opening bell to join. I'll get you in on the following day. But if you want to get in on Monday, do be sure to join up this weekend, either today or tomorrow. And I'll see you guys next time. So thanks for being here. Trade smart and be careful next week, right?